There certainly are some risks of a downturn. There are also some inflationary risks coming from the tariffs, coming from general economic strength. And so he decided not to commit, but to preserve flexibility. I think that was the right course of action for him to take. If the economy turns down, there's the scope to cut rates very rapidly. But if inflation's a problem, there's a risk of a loss of credibility. If you're a responsible Fed official, you've got to remember that you got nervous about the economy last September. You cut rates by 50 basis points, and the upshot was a 75 basis point increase in the subsequent 2 months in the 10-year rate, which fed through into a major increase in mortgage rates. So I think what the Fed did was the prudent thing under the circumstances. Wouldn't surprise me greatly if it turned out that the economy had slowed and we wish we had cut rates now. But if that error's been made, it's an easily correctable error. Whereas if you made the opposite error and sacrificed credibility by moving excessively, that would be a much more damaging and difficult to reverse error. I think the other thing that needs to be said here is you can argue both sides, as I just did, about whether we should have a quarter-point rate cut in July, whether we should have 2 rate cuts this year or 3 rate cuts this year. I don't know of any economist who sees merit in the president's idea that rates should be cut to the 1% range. And I would want to hear what his colleagues in the administration give as a rationale for that kind of theory of interest rate setting, which, given the current rather happy state of markets and rather strong economy, seems to me to be a very, very dangerous one that would court a major loss of credibility. So I'd be very interested in hearing from his administration colleagues what the administration's thinking is there.
Perhaps Chair Powell got it right, but he had at least 2 of his colleagues who disagreed with him. He had 2 dissenters. For the first time since 1993, it's been a long time since we had 2 dissenters. And they weren't asking for a 300 basis point rate cut, maybe the 25 basis point cut. But what do you think that they're seeing we're not?
I don't think it's a complete coincidence that who they were appointed by and in what context. That may not be a complete coincidence in terms of understanding what's going on. Look, I think their argument is that under the surface, there's substantial economic weakness, and it's important to get ahead of the weakness. And my reaction is, if that comes to be a prevailing judgment, the market will do that itself. And it's the 2-year rate and the 5-year rate and the 10-year rate that's more important for the behavior of demand. And that to the extent the market doesn't do it itself, the Fed will be able to do it 6 weeks from now and be able to be more energetic if that proved necessary. So I don't think there's any kind of urgent need for the cut. And I think we are a bit playing with fire.